In a nutshell, volume price analysis is volume spread analysis. It's the basic distribution of volume. Standard volume spread analysis, you can see this is the volume distribution, the amount of volume that occurs over the entire range of the bar. When you take into account the opening price and the closing price inside of that range, then it gives you a volume of information on top of this distribution. So when you see an open, but then you see that there's not much volume at that level, but then as it came down into the bottom of the bar, you saw this is where the majority of the volume was. This is where most of the action took place. So you can see that the price ended up closing down toward the low of the price bar. Volume price analysis then determines that this is a selling pressure bar. So selling pressure is being put on this instrument, and we can safely color this red. That's part of what the Hawkeye volume indicator does, is it goes through and performs over 300 calculations per price bar to determine the distribution, the modal separation, the average true range of the price bar, the standard deviation of volume and price, and it gives you a very simple and easy to use price bar that is color coded: red to show selling pressure, green to show buying pressure, and white to show neutral, or a very even distribution. So when you have the open and close very close to one another, or if you have a distribution which is single instead of bimodal, or information like that, then you can see the answer is going to be inside the volume bar. Okay, so coupled with price, it can give you a real edge in the market. So volume price analysis is a culmination of over 20 years of research. 20 years of research. It's a sophisticated way of trading. It's more like forensic analysis than technical analysis because it gets into the heartbeat of the market. Market makers always relied upon the volume that was traded in order to make their deals, and so it helps you to see trades more clearly. Okay, it gives you a way to perceive the charts, gives you the structure of the market, how to place your trades, how to keep the profits you make, and how to protect your positions. Volume coupled with price will give you all of these advantages. And if you understand the relationship between volume and price, you have an edge. Regardless of if you're using lagging indicators or not, if you couple that with volume, then it will help you, and it will help you to be a much better trader.